And at 7% growth, the US dollar, which currently there's more than 20 trillion US dollars in circulation right now. Short take is there's a gazillion more dollars in 2075 than there are today as compared to $1. So we're going to be paying 12x more for a Big Mac 50 years from now. It's going to be $64.70 a Big Mac. Now you think that's crazy, but if you had asked people back in 1968 whether a Big Mac would ever cost $5.29, they would say you're out of your mind. That's insane. That is 12 times as much as what you could buy a Big Mac for back then. All I'm saying is this is going to cost 12 times as much 50 years from now, which is almost a certainty. And, we don't want to be paying $65 for a Big Mac, and your salary might have gone up, but it's not going to go up 12x. And so you're going to be significantly underwater. It will be much more difficult to buy a Big Mac or a can of Campbell soup or something like that 50 years from now. Meanwhile, one Bitcoin might just buy you an entire McDonald's restaurant. So as the price of Bitcoin, the purchasing power goes up, the US dollar goes down, which means everything gets more and more expensive. It gets harder for the average American to buy a house, harder to buy a car, harder to buy a share of stock in the S&P 500, which is the stock market, harder to send your kids to college, harder to buy healthcare. Everything's harder. And it's harder because your money is losing value at a rate much faster then your paycheck is going up. So Bitcoin is easy to use money. It checks that box, and it checks the hard to make more box, which is a huge deal because it is the first time in human history that a single money has checked both of those boxes and therefore was an ideal fit for where human civilization is right now. We live in a digital age, and we have a digital money now, which is Bitcoin, that is both easy to use and hard to make more. So what happened to our money? The short story is we've been looking for good money for a long time, but nothing has really checked both boxes, hard to make more and easy to use. And we've had these trade-offs as technology has made gold too hard to use, or transportation has made seashells too plentiful. And we've landed at US dollars where politicians print them to oblivion. Technological change has resulted in all of these trade-offs, that pendulum swinging back and forth, always trying to get both good money that is easy to use and hard to make more. And in the case of gold, for example, you could, with the invention of the telegraph, you could telegraph in a second that you were transmitting value, you were sending money across the ocean. The promise is it took forever for the gold to actually change hands. So the gold just couldn't keep up. And ultimately, that's why we ended up with paper representations of money. So politicians keep printing money into oblivion, and our money's losing value. But thankfully, there is a money that is gaining value. As the old money is losing value, the new money is gaining value. And as adoption is increasing, the value of the new money is going up much faster